Good morning, I'm James Gruber and welcome to the Morning Report for Thursday the 18th of June. Well, it was all about the US Federal Reserve overnight. New Fed Chair Kevin Warsh led his first meeting, having taken over from Jerome Powell. And as expected, the Fed left interest rates unchanged at the 3.0 to 3.75% range. However, unexpectedly, the central bank released quarterly projections which showed the majority of Fed officials now anticipate a rate hike by the end of this year. Previously, markets had assumed that the Fed would hold rates steady given inflationary pressures from the war. That news from the Fed sent US stocks and bonds tumbling and the US dollar soaring. As for what's in store for the Aussie market, the ASX is poised to open lower, with index futures down 0.7%. As for the ASX 200 yesterday, it ended 0.5% higher at 8,966. It rose for a fourth straight session to close at its highest in more than 2 months, led by miners and banks, after details of an interim deal to end the Middle East war lifted investor sentiment. Today, energy shares may benefit from the rebound in oil prices overnight, and companies with large US exposures such as CSL, Aristocrat, ResMed and James Hardie could gain as investors position for higher US rates and a higher US dollar. That's because these companies generate revenue in US dollars, and a lower Aussie dollar means that each US dollar earned converts into a higher amount of Australian dollars when they report their financial results. To commodity markets, global oil prices climbed after US President Donald Trump said the new ceasefire agreement with Iran wasn't final and the Iran war could resume if he's unsatisfied. But concerns over excess supply next year limited the gains. The International Energy Agency said US crude oil inventories fell for a 10th straight week last week as demand surged, pushing total stockpiles to their lowest level since 1985. Brent crude futures settled 0.7% higher at $79.55 US a barrel. Base metal prices were mixed. Copper futures were little changed, down 0.1%, while aluminium futures advanced 0.8% as bargain hunters stepped in following recent falls. Meantime, gold futures ticked up after the Federal Reserve meeting. The futures settled 0.6% higher at $4,381 an ounce. Iron ore futures fell 0.4% as heavy rains in China tempered demand for both steel and steel-making ingredients. Let's now take a look at currencies. The Aussie dollar was last trading sharply lower, with one Australian dollar buying 70.14 US cents. Let's get a wrap-up of what's happened overseas with markets. The Dow Jones Index finished down 1%. The S&P 500 dipped 1.2% and the Nasdaq lost 1.3%. A closer look at the trading day there. US share markets fell after the Federal Reserve left interest rates unchanged, as expected, but signalled a rate hike later this year. All 11 S&P 500 sectors sank, with communication services and consumer discretionary down the most, declining 3% and 2.7% respectively. The semiconductor index was the one bright spot, rising 1.5%, with Broadcom up 4.3% and Intel jumping 3.5%. Among individual stocks, Robinhood rose 9% after the online trading platform cut 10% of its workforce. CME Group slipped 3.5% after the exchange operator said its CEO will step down in March next year and transition to the role of executive chairman. Shares of Allbirds soared 39% after the footwear maker turned AI company changed its name to Smartbird and appointed a former Amazon executive as CEO. Meantime, US government bond yields leapt higher after the Federal Reserve signalled higher rates are ahead and retail sales came in stronger than expected. Retail sales jumped 0.9% last month, well above forecasts. The US 10-year Treasury yield rose 6 points to 4.49%, while the US 2-year Treasury yield soared 14 points to 4.19%. To the European markets now, the continent-wide FTSE Euro First 300 index ended up 0.6% and the UK FTSE 100 rose 0.1%. Europe inched higher on Wednesday as investors awaited details of the US-Iran peace agreement and the Federal Reserve's policy outlook, while auto stocks fell after BMW cut its annual forecast. Heavyweight banks supported the index, advancing almost 2%. They also logged their fifth session of gains and their longest streak since early January. Tech stocks climbed 1.5%, with Akestron up almost 7%. Auto stocks declined the most, down 3.3%, the biggest one-day fall in nearly a month. BMW lost more than 8% after the premium car maker lowered its annual profit outlook due to weakness in the Chinese market and the impact of the US-Iran war. Let's take a look at what's on the watch list. In the US, the Philadelphia Fed Business Outlook for June is out, along with the Conference Board Leading Index for May. In the UK, the Bank of England will make a call on interest rates, with the market expecting them to remain steady at 3.75%. And that's it for today. For further developments on the local trading session, please tune into the CommSec Market Update this afternoon and, of course, the Market Close video. Have a great day.